Most homeowners assume that their policy covers all the scenarios, and that's very far from the case. Today, we're going to go over the 8 coverages that you thought had coverage on your policy that you need to add in to make sure it's covered correctly. Also, we're going to do some comparisons on some companies for you at the end that we can get an idea of which companies offer some of these coverage options. The number one is the most common is flood insurance. Flood is when water comes into the house. There's 3 coverages that you're typically thinking of when you see a home policy. There's one, the sudden and incidental, the coverage A, that covers the house or the dwelling as they call it. And if a pipe bursts, that's where that coverage sits. So that 400, that 500,000, that 900,000, the $2 million that your house is covered for has a coverage for that if that pipe explodes. Your second coverage that people typically add on to the policy is water backup, and we'll probably talk more about it here in just a moment. The third is not covered at all, which is the flood insurance, and that's from foundational. If water's coming in through a window, or if they're coming in through the ground, it's not trying to leave the house. That's your flood policy. If you're in a flood zone, you don't have a choice. You have to carry that coverage just because of the location you're in. But if you're near a flood zone, you may not have to cover it, but you may want to be careful because if there is a flood, there's no coverage at all. Well, why wouldn't they just add it to the policy? The reason is because it's twice the price. Whatever you pay for your home insurance, you're probably going to pay 70 to 100% of that same price to have a flood policy. Now, the flood policies are a little bit different where you don't have to carry all the same pieces. So if you don't want your personal belongings covered, you can remove them. If you just want part of the building covered and you want to pay part of it yourself, then you can add that in. So you have some options that can make it cheaper, but in general, if you were to cover the same house, same coverage for the flood scenario, you're just going to pay twice as much. The second, which is more towards your California type area, is earthquake insurance. And earthquake insurance typically is not in your policy. If it is, it's a very low level coverage or a very basic coverage that barely covers anything. It's usually a separate piece on your endorsed policy, just like flood insurance. If there's an earthquake or any earth movement, so to speak, then you need to have an additional coverage for that. Number 3, which is the most common that I see, it's called wear and tear. Wear and tear is not a policy coverage. If the pipe starts dripping over time because of the age of the house, or the roof starts breaking apart because of the age of the roof and the shingles start to lift or curl, in all of those scenarios, that's wear and tear. There's not an additional coverage that usually lets you have that. You just need to know that anything that's a slow incident or a slow claim, that's typically not going to be covered. If there's mold anywhere, that water damage usually has been sitting there and in most cases are going to get denied on an insurance policy. The basic way to think about that is it's routine maintenance. If you don't maintenance your home, you're going to have issues down the road, and that's just not going to be covered under your policy. The fourth is what we talked about earlier, which is water backup or sump pump water backup. Those are different versions depending on which state you live in. Some states, in Michigan, for example, in your basement has a sump pump. It ejects the water out of the house. There's pipes that go out and a pump shoots it right out because we're in clay bowls is what our houses are built in. So our basements are built in these clay, and it just always is having water come in. So they figured they just pump it out, and 9 times out of 10, you're good. But if that sump pump fails, or if your toilet overflows and is trying to leave the bathroom and it comes back up, someone throws a toy in it, you didn't know, kids doing play and having fun, that boat doesn't float in a pipe. Or if it does, it's pumping the water back out. Someone turns on the sink gets clogged, you don't realize it. You turn on the bathtub, you fell asleep. Those scenarios could happen to where water is trying to leave the home and it's backing up. That's your water backup. That water backup has certain limits that you can have, typically 5, 10, 25, and 50,000 is what you can carry on a home policy. And in some scenarios, you can increase that, usually in writing or by verbal agreement from an underwriter. That underwriter can determine if you need more coverage if you request it. Usually you're going to have the same deductible, but you can choose different deductibles sometimes to make the cost difference. It's only going to be about 20% of your normal price of the policy. So if you're paying $2,000 for your home insurance, that $10,000 water backup is usually going to be about $200. By the way, water is one of the most common claims. So this water backup coverage, I think you should have it on just about every policy, especially if the price fits, because sometimes it's not that expensive depending on the company that you go with. Wait a minute, Mark, you said the company that I go with can be cheaper? Yeah, because there's a couple scenarios that companies look at. They look at 2 things. One, is there claims in that area? If State Farm has no claims in that area, they're going to be more competitive. Or if Nationwide has a ton of claims in that area, then they're not going to be competitive, and vice versa. The other part is these companies are taking what's called a profile. They're looking at your insurance score, the history of the home, the age of the roof, the age of the pipes, the type of materials, but all of those things build what's called a profile, and companies have different fits for different people. So if you're looking to combine your home, your auto, you might have a boat or a motorcycle, some of these companies have priced that home to be less expensive when you're coming in as a package. That's where that independent agent is going to come in to be handy and help you with that. If you are looking to shop your home insurance, or maybe your home and our auto and the whole package, I'll put a link in the description below where you can work with one of those independent agents, where they can shop Nationwide and Safeco and Allstate and Progressive and all of those major companies, so that they can not only just get you the best price, but also focus on the right coverage that we're talking about, so you're covered correctly and you're going to get the best deal. That leads us to number 5, which is your personal property. And there's 2 types of personal property. This is one of the most common mistakes that I hope you never make, or no one ever does. But you have what's called your actual cash value. That means over time, everything loses value. Your couch, if it's 10 years old, is worth $200. If it's brand new, it's worth $2,000. Most people don't realize that you should be carrying what's called replacement cost. And that replacement cost isn't that expensive to add, so having it is a huge benefit. Essentially what it means is if your couch, let's say it was 10 years old and there was a fire, it was a covered claim, they're going to replace it. That couch to purchase today might be $3,000. So that replacement cost is the $3,000. It might be $1,500 for that $2,000 couch. So then you're going to get this $1,500 essentially to replace the couch and put a new couch in its place, versus the depreciated value where everything loses value over time. Now, if you look at it hindsight, it's not that big of a deal if you do the actual cash value. If you look at it overall, let's say you're covering $200,000 worth of all of your contents. That's your silverware, your shoes, your couch, all your furniture, the TV, and the house went up in smoke. Having $200,000 to essentially start over might be enough for some people. For a lot of other people, they want all the stuff that they had before, and that $200,000 might be $20, $30, even $100,000 short what it is to replace. In those cases, check the cost of replacement cost value or contents replacement versus having the actual cash, the standard coverage. Number 6 is going to be liability type insurance, not just for you, but for a business. In some scenarios, and actually most scenarios, companies do insure businesses in your home. If you're going to be cutting hair, if you're going to have people come over, if you're a tax consultant, all of those things. By the way, there's some discounts to those, so I'll link a video here that will help you there. But if you have a home type business extended into that liability, you want to make sure you're covered, so if someone slips on your driveway, if they come in and get injured, something happens, that your home insurance policy will cover that. Some policies exclude business use, so that you might not be covered if somebody's coming over. Talk to your agent about that one to make sure that you have that coverage if you are doing any type of a business. 7, which is a hopefully known, but if you have any type of an infestation, it's not covered. If there's pest or mold, it falls under what we talked about is lack of maintenance. And that in general is not a sudden and incidental occurrence. So if you have, let's say, termites in the house or termites in the tree that's in the yard and they chew through the tree, falls down, even if it falls on your neighbor's house, now you're getting sued. All these things are happening and that's just not covered. If you didn't maintain the home or at least find the infestation, if rodents got in your home, there was a reason caused behind that. And in general, insurance just doesn't cover it. There isn't an additional coverage that I know of. And honestly, I don't even think there's a company that will cover that either way. Number 8 is the vein of my existence is vacant homes. Vacant homes can be insured, but most of the time, only for 30 to 60 days. If nobody's moving in the home and it's just a vacant home, there's different policy types that they can be covered under. Not as good coverage. If you have all the contents and stuff in the home, then that's one thing. But if it's just a vacant home and there's nothing in it, nobody's living there, then you have to typically write a different policy. In that case, you're going to talk to the agent to find out which policy type that you should be carrying, because If the inspector comes out in 60 days and reviews the home and looks in the window and nobody's there, they're just going to cancel your policy, or they're going to non-renew it, so you're not going to be covered in any which way. So what are the trends that I talked about in the beginning of the video, and what are some of these comparisons of options that you have? A couple of trends that we're starting to notice is we've noticed from the California wildfires and wildfires in general. We've noticed that in Texas, certain claims on weather-related damage, and in Florida, all of the inflation that's been happening. Some companies in Michigan have been going a little bit crazy because of the age of the home, and the roof are being verified by virtual satellites, and all of those things are starting to play a factor, which actually can be a benefit. But we're starting to see those trends in general about the home. The condition is the biggest piece that matters. If you have streaking on the roof, you're going to want someone to clean that. In general, you want to have someone clean it anyways, because it can cause mold and it can cause issues. But your insurance is not going to love that when they come to inspect the house, when they do an aerial view, or have you even take photos for them to verify and approve the home. The other trend that we're seeing is that the deductibles are going up, which you probably should anyways, because inflation, if your dollar's only worth half as much as it was last year or the year before, then the deductible doesn't really matter if it's $1,500 or $2,000 versus $1,000 that it typically was. The value of money has gone up, so deductibles are typically going to follow that. If you're in states like Texas, you're going to notice that there's only a 2% deductible with some companies. 2% of a $500,000 house is $10,000. So if you don't have $10,000 to pay for a claim, then that might be an issue. Unfortunately, in some areas, the closer you get to coastal areas, the more likely you are going to have to be forced to carry a large deductible. The other trend that I'm starting to see is be very, 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 very careful on the roof. A lot of companies are denying roofs because of the condition. A lot of roofers are coming around. Some are scamming and trying to say, we'll get you a new roof paid by insurance, and people are getting sued, and it's all of these things are happening. But you got to be careful when you purchase that home policy. Is my roof replacement cost, or is my roof actual cash value? It's called a scheduled roof. And I'm seeing a lot of these policies default to that scheduled roof. I'm not a big fan of it because it means the older your roof is, the less it's covered. For example, let's say it's a $20,000 roof. If you're halfway through the life of it, probably 70% of that roof isn't covered. So you're going to be on the hook for $15,000 of that $20,000 just to have a roof replaced. If there's a major windstorm and it rips half the roof off, you're on the hook for that. Which companies are most competitive? The companies that I've seen the more competitive. State Farm is doing a pretty decent job on being competitive in a handful of states. They are not independent, so you have to go directly to them, and they only offer one price, one product, because that's all they have. You've got Nationwide is an independent company, and Travelers is independent. Now, they are pickier, so they don't want just junk roofs and junk homes. If that's the case, you're probably better off going. I hate to say that, State Farm's gonna hate me for saying that, but you're better off going there because they're gonna be cheaper. They may not inspect it as heavy, all of those pieces. But your Nationwides and your Travelers and your Hartford companies, they're going to be a better pricing in most cases, and they work with independent agents, so that one agent can check all of them at once. That way you can understand, is this a good fit? Plus, they can talk through the coverages with you to make sure that you have the right coverages anyways. Geico and Progressive, they're great on auto, but they're not necessarily the best on home. Progressive can be really competitive on the pricing of the house, especially if it's a new purchase. Then they're going to give you a little bit extra of a discount, but they're random with what they give you. I've also made a video on this channel that goes a lot further in depth on the issues that we've seen with Progressive. So even though they might be competitive, insurance is unfortunately, you get what you pay for. Good company, but you got to be very specific on the coverage you need because they don't like gray areas. They don't like to cover things that weren't specifically listed, where a lot of your State Farm and your Nationwide and your Safeco and all those guys are willing to cover those extra pieces because they're looking to take care of the customer and get a good review at the end of it versus just not paying the extra money out. Again, hopefully this wasn't too overwhelming. I went as fast as I could because there's a lot of information to cover. If you are overwhelmed, talk to the agent. If you have a local friend or a local agent, go to them. If you don't, fill out the description below. This will connect you with an independent agent that can shop all those companies, but more so start the conversation. Have them get connected with you so that you can say, what do I need to cover? Here's my house. Especially if there's photos online, it'll take them 30 seconds to go through the photos and quickly understand. There's crown molding, there's extra bay windows, the piping's really old in this house, so we need to cover the service line backup. There are all these pieces that an insurance agent that's experienced should have a really good fit bit to help you understand what coverages you should be carrying. Like I said, that's in the description below. If you're thinking of trying to go the cheaper route, then check out the video that we did on Progressive's home. I'll link that here. If you want to learn more of the specific coverages for homeowners, I've got a Homeowners 101 that'll go further in depth as well. I'm Mark with Think Insurance. I'll see you in the next one.